Hey, what's up? Welcome to Degen Ed. That's degenerative education, meaning none of this is financial advice. Just me having fun looking at charts, like the chart behind me, which is of Applied Digital Corporation, ticker symbol APLD. I do believe that they have kind of pivoted into the crypto space, but I'm not exactly sure. I really just wanted to go over the chart because I do think it looks like it's potentially putting in, cup and handle, about to break out. And so I think in the next couple days, maybe the next week, it could be a lot higher, but it also could be a lot lower. I could be wrong about this. These patterns can fail, so good to be cautious of that. And so, yeah, I'm really just going to be going over my breakdown of this. And really the reason why I'm doing the video today is because I had put out this video on USA rare earth elements. Looks like it came out on July 31st, and I just took profits on that. I just exited. It was getting close to $20 in that video. I talked about it getting there from, I think it would have been a 70% move, something like that. And so I was trimming on the way up. And now that I've exited that one, moving on to the next one. And so I think Applied Digital is actually looking pretty interesting. And I have to say that I was previously in a small position, really inspired by the Bronx Viking posting on X, doing a comparison between Applied Digital and QuantumScape QS, where here you have Applied Digital on the left. Looks like it's potentially breaking out from a bull flag. Very similar to what happened with QuantumScape, which I also covered previously, but I paper-handed. I got out too early. Could have made a lot more money. But yeah, I just wanted to give a shout out to the Bronx Viking because he's the person who put this on my radar. And I was holding contract. I did exit. I might re-enter. I don't have a position in it though. So I did kind of want to just give a little bit of an overview on that and really, what I am thinking about with this contract. So Bronx was talking about Applied Digital getting to around 30 by the end of the year or, January, something like that. So I thought, hey, there's this $30 call that expires in January. Premium is, 90 cents or so, which is about $90 per contract because each contract represents 100 shares. So 90 cents times 100 equals $90. And that is the low for the day. So it'd probably be getting a fill closer to, the average here around 93 cents. And I'm not trying to suggest this is a good contract to buy. I have no idea. I'm personally thinking about it. But I did have a position in this. I think I had a couple contracts, so not super huge. And I sold maybe a week or two ago at around, I think, $1. Let's see, we can scroll back here. Yeah, so it did get up to, around $1. I took a 10% profit or something, nothing too huge. And the reason for that is because I was looking at a contract. I'll take you guys through that in a second, but it kind of got me thinking, hey, it might be consolidating, and the premium for this contract might dip down a little bit. I might want to exit and then reevaluate. And so this right now is that time to reevaluate. And so I'm just going to pull up the chart here. This is in TradingView, and just a number of things that look really good about the chart. Before I get into the drawings, we do have the 200-day moving average here. So very clearly it did break above that, and we have been, hovering above it with some nice distance between current price and that level. So I think that looks really good. And the 200-day moving average is at a share price of $8.39, whereas the stock is currently trading around $14.64. And while I'm talking about the current price, I do also want to mention Max Pain. Coming up for this Friday, the 15th, Max Pain's $11. Then the next couple weeks, $12, $12.50, $13, $10 for September 19th. So we're above Max Pain for like all of these strikes. So that could be suggesting that a gamma squeeze or gamma ramp is on the horizon or, is actually taking place right now. So just wanted to point that out before I forget. But yeah, coming back to the chart, other things that stand out to me. I was just looking at this over here. Look at that nice amount of volume, a lot of effort going into that move up. And then we've seen volume really die down. As volume has died down, price has been consolidating up here. And so that makes me think that there's very little effort going into holding the price up this high after it's gone up, about 50%. So I think that this diminished volume here is really good. That makes me think this is a bull flag, just like the Bronx Viking was talking about, that, this could potentially be breaking out to the upside. And yeah, so I just think that looks really good there. And yeah, we can also see over here a large amount of volume. This was in June. Lots of volume, big push up, and then volume did cool off as it pulled back. Got this nice surge in volume again, which is a smaller amount of volume relative to over here, but we actually pushed up to about that same price. So it takes less effort to get up to this level. It takes less effort to hold price up here, whereas, over here, volume died down and price came down. So I think that this looks really good. It does look like a cup here and a little handle being formed. Maybe we break out. So, I think that just looks awesome. And then also looking at the RSI, we do have it over here on June 4th. The RSI was around 85, well above 70, which is, the overbought territory. Then we did see it pull back, coming to lows around RSI of like 45. And then we did just recently get rejected from around 71, pulling back some. So that makes me think that this is getting ready to launch up with the price. And we could be getting back up to, like 85 in the RSI. And then maybe that would be a time to maybe take some risk off the table. But right now, yeah, we do have a slightly lower high over here. So the high actually on June 6th was 1542. And then so the high over here on August 7th was 1537. So this is a lower high in the stock price. And that is also corresponding with a lower high in the RSI. So there's no bearish divergence there. That would be if there was a lower high here and then a higher high down here. That would be divergence. And then also kind of supporting that, there not being any bearish divergence. We see the same thing in the volume like I was just talking about. Lower volume, although corresponding with these spikes, lower volume, less effort to get the price up there, corresponding with a lower high. So we get another surge in volume. This really takes off. So I think that just looks really good. And I did have like a channel drawn on here previously. Maybe I can, yeah, like that, magical. And yeah, I'm not really sure that's too significant, so I had deleted that. Let's see if I can undelete it. Maybe I want to bring it back just for a little bit of a comparison. But yeah, we've got the lows over here kind of bouncing in this range. And so we got this failed breakout over here in June, pulled back. And now it looks like we could be getting a successful breakout. So I think that looks really good. But then, where are the, more immediate targets, that I would think Applied Digital could be getting to? Just going to remove that. And so the way that I would think about this is by doing a Fibonacci extension. Could do it from, here to here and then up to this. But that is actually, there are multiple ways that we could do a Fibonacci extension. So maybe I'll do that at the end. But really, what I was thinking is, since we had this big move up and then a pullback, now from this pullback, we've seen an upside move. Actually, maybe I want to do it. I think I actually want to do it on a smaller scale, even very micro scale. These are the daily candles. But seeing from this pullback, then we have this move up. Where might that next, measured move be? And so that would just be by taking the Fibonacci extension tool, or the trend-based Fibonacci extension tool here in TradingView. And so I am just going from approximately the bottom here, then going up to the top here, and then pulling down to, lining up with the low here. And that's actually another thing I forgot to mention, that we are starting to see this bounce here. The candle is green here on the day for Tuesday, August 12th. But, following this pullback, little bit of a bounce, pullback again, we saw a higher low. get put in. So that does make me think that we are respecting that level and that this could be really starting to take off. But so anyways, from that high, pulling back to that low, that's how we would get that extension, which is basically, let's just see, I'm just going to draw it. So just going from the low here to the high, that is, this 100% Fibonacci extension, the same idea, just that distance from the bottom here to the top. And then I'm going to take that and move that to the low that followed that. And then we can take a step back and see. I added some other levels to this. I was looking at Ethereum earlier on the log scale. So I really just want the 1 and the 1618. This is the 100% move corresponding, as you can see there with that arrow. That's around $20. So maybe 30 is a little ambitious, especially with that 1618 only being at around 24, 23.72 exactly. But actually that's approximate because I didn't draw a pinpoint to the highs and lows. But yeah, I mean, I think that this could be breaking out in a fashion like that. And so that was from, let's see, how did I draw that? So from the low here, we could also do this. Let's see, from the low over here, and then pulling back from the high here. Where might that Fibonacci extension take us? And so then I'm just going over here, getting that cursor lined up with the bottom here. And then now we can, adjust that y-axis to see. So like 21 is that 100% extension. And so again, that is going to be, just the distance from here up to the top there. And the arrowheads always get a little bit wonky for me. And then, you just move that over there and that lines up with that 100%. So that's how you get those, levels there. I'm actually just going to delete those arrows so there's not as much clutter. But then let's actually look at what the 1618 is. For this one over here, I said it was around 24. I suspect for this one that I did, the bigger picture, it's going to be a little bit higher. And so that suggests around 2850. So yeah, I mean, I do think that 30 is a reasonable target, but with an expiration in January, I think that's a little bit risky, at least for my comfort. But I do think that we are probably going to be seeing some explosive moves here with this looking like a cup and handle, this looking like a bull flag, as the Bronx Viking has pointed out over here. Yep, and exactly, this is one thing that I have learned from him following him on X, is that you see this surge in volume, that volume's diminished as he's pointing out. And so maybe we get a retest. And actually this was on the weekly time scale is what he was looking at. So if I pull this up on the weekly time scale, we can see, yeah, I mean, this is still, cup and handle. And let's see, actually. So I'm not sure if he's on the, I think he's on the log scale there. So let's look at this on the log scale. Maybe, I don't know, that doesn't really make much of a difference in my view. But maybe, just to kind of emulate that, look at that candle there. Green, red. Let's see, sorry, I'm just... So with that red one, we're on the third one after. So we're on the next candle over here. And so I'm just going to do kind of this little comparison. Yeah, so I think he's looking at it on the log. And yeah, I mean, we have, broken out from this. So either way, with that being said, though, it's quite possible that we could see a retest of this and then a bounce up. So good to be cautious of that. And that's actually kind of why I was excited to talk about this, looking at some of the options data. So not necessarily this contract, but what we can see. When I started recording this video, net call premium here that you can see NCP, that was up around, I think, $800,000 for the day. Now it's up over $1 million. That means about $1 million is likely going long on Applied Digital. Also, you see the red, that is the net put premium. That's coming down about 132,000. And I can actually expand that over here so we can look at this. And I actually wanted to go back in time to look at something that made me really get a little bit anxious, and that was over here on July 31st. We had a net call premium increase, let's see, of over $7 million on that day. You can see the number right here as I hover over it, $7.4 million increase in net call premium. That was on July 31st. So if I look back at this chart, just go to one day, I can go backwards in time up here and go to, let's see, just click through them all, July 31st. And we can see some of the increases in that net call premium. And so actually, how did I want to do this? Let's see, over here. So these increases were, let's see, just on, wait a second. Okay, yes, this is, just making sure, okay. July 31st. It was saying August 1st there for some reason. I'm not really sure why. Okay, so we got this big increase in, actually, did I? Yep, so this is August 1st. I want July 31st. We can see these big increases, the big spikes in the green here. And so that's going to be a lot of call buying, I imagine, big orders. And so we can look at those big orders to try and understand what's the position? Is it long-dated contracts, short-dated contracts, in the money, out of the money? So we can get an idea of, is this momentum going to continue or is it likely to be short-lived? And so this is on July 31st. So I'm just going to go over to the flow feed here. I do have Applied Digital typed up here, but I'm just going to clear it up here and we can just do Applied Digital, type that in there. In the time range, I want to go to just July 31st. That's all I want. So I can go there. It's going to stop moving. It's going to calm down. And then I can scroll down over here, get that premium to be 100,000. So we just see like the larger orders here. And we can see the premium in this list, 300,000 is pretty big. But then we also have, let's see, just a lot of orders, hundreds of thousands. I think what I actually wanted to do is just see, this is, big jumps here right at the start of the day. It looks like around 9:30. Yep. So let's just look at the flow data from the beginning of the day, 9:30, 9:39, 9:44. And so this is a September strike. So that's into the future. But this one that's 215,000, that was actually a strike that's already expired, or a contract that's already expired August 8th, another August 8th here. So there are some, expired or soon to be expired contracts here. But this was, let's see, August 8th. And to be honest, I'm a little rusty. I'm not exactly sure what got me antsy about this. But just looking at the data over here, we can see that a big push up in that premium. And I feel like, okay, so that was on the 31st. That's what I need to scroll down here to see. Ed's in the way. I'm sorry. I'm going to get him out of the way. So on the 31st, we saw, 2,400 contracts volume traded on that day. But then the day after, we see that the change in open interest, it dropped by 1,600. So that was actually not such a good look. So that got me thinking, well, maybe this is, selling. I'm a little bit concerned about that. We come back to the list over here. The other one, this is September 19th, $12 strikes. We can look to see following the 31st down here. Yep, look at that. There was a volume of 3,000 contracts on the 31st, which led to a decrease of nearly 1,800 contracts being sold. So that got me a little bit concerned. Have we seen much of a change in these? It's all just been selling. I mean, from yesterday, there was an increase of 14 contracts, but still generally, even this, in the money contract, it's, it's making me think that, I was a little concerned back then, and now moving forward, it's just really just cooled off. And so, yeah, let's actually just look at this for today, though. I'm going to remove the time filter so we can see all the big contracts for today. We can see a January 15th. It expires in 2027. It's a $5 call. That's kind of a crazy strike because price is, around almost 15. And this looks like, 120,000. Yeah, these are just really expensive contracts. It's 100 contracts are 117. And let's see some of these that look a little bit more. This is the 22nd, so not this Friday, but the following Friday. These both look like they were on the bid side, and that's a strike of 1350. So this does indicate that they are bearish because it's on the bid side, but we'd really have to follow up with these contracts tomorrow to see if they were being bought or being sold. And so we can see that for today, for August 12th, for this contract, there's a volume of 4,800 contracts being traded so far today, which represents a total premium of just shy of $800,000. So that's a lot of money. But we don't know if these are being opened, if these are being closed. If we do take a step back, maybe the past 14 days, we can see that the premium in yellow there did kind of spike there. So, maybe somebody's taking a little bit of profit, but we did not see, a big spike in the candle suggesting there was a big buy earlier on. Maybe we go back the past 90 days. Yeah, no, I think that this is probably positioning for more moves to the upside. So what I'm going to do, because I don't want this video to be going on forever, I want to keep it below 30 minutes, but it's over 20 right now. I'm just going to add this to my watch list, and that's just going to be my bookmarks. And so from there, we can look at the contract lookup. I'm just going to refresh this page. And so let's see. I don't know what's going on. Refreshed. Okay, now we've got the two contracts. This is the one that I personally am kind of interested in, that I had previously sold. Maybe I want to get back into 90 cents. I feel like that'd be good. And that could be trimming at 10% profit, 20% profit, maybe going for a 2x. I don't know. I get a little bit antsy when there's less than 6 months between now and expiration. That's just me. That's how I handle emotions. But then we can see this other one that expires in, not this Friday, but next Friday on the 22nd. This one is, the average $1.64, so $164 per contract. With it expiring in less than 2 weeks, that gets me super antsy. This is one that I personally would be avoiding, but I'll probably follow this to just be learning, looking at the data, seeing if the open interest is continuing to increase or if it's starting to decrease, taking some profits, taking some risk off the table, whatever. But yeah, this $30 strike call that expires in January, 157 days between now and expiration. This one looks pretty intriguing. And I was talking about this, the concern following the 31st of July, the open interest for this contract actually went up. And so I was being a little bit cautious taking profits around here. I could look it up, but I'm not going to pull it up. When I actually did sell, I feel like I sold probably on either the 5th or the 6th. And, I could have bought back at 80 cents, but I didn't. And now we're at the 12th. The low so far for the day is 90 cents. But yeah, I think that this could be a really nice play. Whether it's shares, safer bet, 100% safer bet. But this could be a nice way to swing, not wanting to hold forever. 10% profit, 20% profit in the span of a week. That's not a bad deal. So this could be fun. And I will probably be posting stuff on X about this contract, a $30 call that expires in January, as well as the $13.50 call that expires 10 days from now, just to see what's going on with that open interest. But anyways, I've been going on a lot about this. I'm just going to bring this back to the picture that I started with over here. I do think that Applied Digital is going to be breaking out. Surge in volume, lower volume, RSI not yet back to 85. I think that we're going to be seeing this get into the 20s, maybe not get to 30, but I think that there's a lot of upside potential. And so I just wanted to share with you guys. But as always, those are just my thoughts. If you found them helpful, make sure you like the video, share your thoughts in the comments down below, and make sure you subscribe to the channel for more videos like this. Thanks a lot for watching. Take care, you guys.